Wednesdays. So this will be recorded, everybody. We got our topics today. All right, and we're gonna get cracking.
How come you're recording this one? Because you got topics?
No, I've been recording every for the last couple Wednesdays. I've been recording because most people have been missing them.
Oh, my bad. Thank you.
Yeah, you ain't see. That's how I know you ain't going to go check the resources.
Touche, touche.
Mm-hmm. Yeah, it's all right, big brother. You know, I forgive you.
Thank you, sir.
For the ones, for people who legit don't know, if you go back to any of the resource channels on the Discord, stocks, forex, and futures for the last couple of Wednesday technical classes I have done, I posted the recordings in there. Typically, it may take a while for the video to render. So if I don't post it, I try to post it as soon as possible so that way I don't forget. Or, then I can just add everybody once it's done rendering because it takes a while for the video to get finished. But typically, from the last couple Wednesdays, because I know the holiday schedule, people moving around and do not have the ability to, attend or may have to jump out, stuff going on, stuff like that. The recordings are there. You can go back, get some great information, learn some great game, or just review what we went over tonight or the last couple of nights, Wednesday nights. Okay. So without further ado, we have our chart. I should see this. I got MC D up. Mickey D's, baby. So let's talk about it, right? Reversals versus continuations, right? So the best thing to know, let's get rid of the oscillators. Let's just look at the chart, right? What is a reversal versus a continuation? So we clearly must first identify what trend we're in, right? We're in an uptrend. So when you approach your market, whatever market you're approaching, you must identify the trend. That's why this algo is very important, or you can use the algo to help you identify your trend. So we have buy signals here. Every buy signal telling you, hey, it's going up, great. Then you have your sell signals. Well, you must interpret the sell signals. In a bullish trend, right? Every sell signal is signaling that the market is pulling back to support. Use your technicals along with your algo and any other indicator you choose to give you confluence or just market structure in general to say, okay, great, I'm going up. Now, y'all see these BOS, break of structure, change of character. Y'all see this on my chart, correct? And then you have this change of character here, right? If you want to know what's going on, yes.
No, you're asking a question. I'm just answering.
Oh, yeah, okay, cool. So once you see this low get put in, you see how the market came down and did not break it, right? On every time frame, the market do the same exact thing. It puts in a low, it is a support level. Price goes up, came back down. Even though price did not revisit the highs right away, but they also did not retest the low. They came here, or sometimes price can test it, but it did not break. It came down and kept going. Now, it's terms for all of this, but we're just going to keep this very simple, okay? If it would have broke this low, we knew like, hey, we had a bad entry. The market is shifting downwards. We in a bad trade, exit, right? But the fact the market did not shift down, price continued to go up. We get a new signal, did a break of structure, build some support, then went off again, right? Okay, great. Now, same old thing. We have a new base here, right? 3 candlesticks form some support. So we have a support at 260.25. Price goes up, arches back over, put in a slight signal. Boom. Price come down again. Retest this trend line support. If we imaginary say, hey, the trend line not there, we can actually start a trend line from here, and then you just draw it up and continue to follow set price, right? But we're gonna say, well, price found support again, did not retest the lows or come nowhere near 260.25, so we rocking. So instantly right there, you mark this as your new low. Break the highest, break the structure from this internal market structure here. Take that high and keep on trucking, right? Right here, they put in a bearish candle, pull price down this price, right? It then continues. So this is our new low. What you do, you just keep marking the lows until you get a break. As price steady trending in your direction or your favor, you just steady let it go. Now, in some cases, what was that chart? Oh yeah, somebody was on the SPY last night, right? SPY. Great example. I still remember this. So that was on the SPY last night, and it was, I think it was yesterday. Here on the events. Drop down. Right when the spot took off yesterday, 15-minute chart. Boom. I think it was Monday. Okay, great. So I'll come over here. Boom. Now let's drop down to a 3-minute chart. Okay, exactly what price happened at. All right, then let's go down to a 1. Okay. Right up here. Right. So somebody took a trade. I think this was the ballpark. We actually went over this last night, right? But it was still a great example, right? Let's say. So they took a trade at the open, price drew down, they seen price going up, right? Price consolidated, but came right back down. Well, the thing about it is this, right? The trader took the price on the explosion out, seen some green, price came back down. They said, oh crap, the trade is reversing, got out, market ran. Well, in general, this is not the exact piece, but it's put in, when the market put in certain candles, right? Like this, price will draw down until those rebalance those candles and go off, right? If you catch it on an exploding move or like in certain price areas, you will want to say, okay, cool, I see what it's doing. You see the BOS right there, break a structure. You say, let me just take profits, wait, and stick with the move, or you can just simply let it go all together, but you never turn a winner into a loser. So what you'll want to do is either just go ahead, scale out of your position, take some form of profits, especially you see it starting to cap out. So you'll say, all right, what's the last high? Price is going sideways. This is my ceiling, right? I'm seeing price going sideways, price starting to go down. Now look at your oscillators. Boom. You watching. Okay, cool. The MACD is right here going down. Okay, now let me look at my squeeze and swing. Right. All right, my swing below the zero level. So I'm in bearish territory right now. Right. Then from there, my squeeze really not pushing all that much. So from there, you're going to want to say, okay, what's happening here? Let me go ahead and not play with this. If it's choose to break down, let me exit. The moment it swept that low with some volume, you should have gone and had a stop loss in place or to simply exit the market and wait. Market drew down, found some said support, and then went off. It was a choppy ride. Now let's evaluate this trade. Why was this a choppy ride? So let's try to, we're going to bring this back a little bit. So I want to cut off this to see how the day started off. Now let's back up to the higher time frames. Let's go straight to the 4-hour chart and look at market structure. We're going to need some assistance. So I'm going to add my moving averages or my EMA clouds. They're going to give me 4 moving averages off that, or whatever moving averages you like to use. You're going to just add them to your chart. Let's go see what the day said. All right, cool. My 4-hour chart was in bullish territory. Great. Now I'm looking for a scalp or intraday trade. So I want to make sure my 4 hours in a bullish territory. Go down to the 1 hour. See what it's doing, right? How I finished the day yesterday and how today looking. Right. So that's the whole thing, reason why you're looking for that said confluence. All right, great. By 1 hour was off support, but looked like it wanted to. What happened was at the open, it drew down to find support again. Now I want to go to my intraday time frames. Most people use a 15-minute. Me personally, I like a 12-minute, but for the sake, you're gonna use 15. Now, what you're paying attention to is this. Yesterday, this was your highest point. Price drew down, came down a little bit more because it wanted to find some type of balance here, right? The moving average is here, 5, 12, 34, 50. From here, it drew down to something else that was looking for a level support or order block. That's what I want to kind of come down into. Boom, find support and go off. Now, watching this and understanding, like, hey, you probably could have seen this happen in post market. You also could have seen it happen in pre market that it was dipping down. They had some a couple of companies reporting yesterday, that day, whatever may be the case, that affect the spot. But you want to pay attention to that. But remember, overall, you're still in a bullish market, right? You're looking at your oscillators. Some oscillators say, hey, where I go, I swing above the zero line, right? Very important. Go back to your 1 hour. Swing above the zero line. Great. Go back to your 4 hour. Just swing. Swing above your zero line, right? So from there, you had all form of confluence. Then also understand your chart patterns, right? 4 hour candle closed like this. We had bullish engulfing followed by doji. Now, two things could have happened here. If this 4 hour candle would have flipped bearish, that would have been an evening star. But if this 4 hour candle failed to make that evening star, so you call it a bearish swing, right? But this turned into a different type of pattern here. This pushing upwards past the doji turns into a 3 candlestick continuation pattern, or it's an order block, 3 candlestick continuation pattern, right? So this actually form an order block. Price will want to come back to the zone later on at a different time and date and revisit this said zone of price action once it's closed above, right? That's something you want to remember. This happens on all time frames. It just, what happens? When you just got to recognize it and understand what happens. It will fly off, come back, and retest the zone exact, right? Did we get a retest anytime soon? Let's see. Let's play here. Let's see if they came back and tested it. Boom. There we go. Right there. There you go. That's your retest. So you seen how price went up, came back, touched the zone exact, and then went off, right? Took 2 days. We closed bullish. They gave you 1 day of push. Next day, came down, retest your zone. Now, this exact move happened on the lower time frames. Most of y'all are entering these candles. You see a little bit of profit, and then when the next candle come over, it comes down, touch your level, and you're not expecting because it's coming back down to your entry, and that scare you out the market. In reality, it's coming back to retest this said zone here. They're located in the resource channel. So inside the discourse, underneath where you see your stock chat at, you go to stock, where it says stocks and options, where it says forex and futures. At the bottom, you have trading chat rooms, trade ideas, resources, right? So you go down there. Those videos is a lot more video stuff and information posted inside of that tab. Just go check that out. Okay.
Excuse me, Neil.
Yes.
Real quick question, please. How
Yes,
how
sir.
does that become an order block? I'm confused on that part.
All right. So this is what it is, right? When you see this, let me move this, kind of make it easier to see. Right? All right. Boom. It's a candlestick pattern they like to put in to form order blocks, right? So when you see this bullish engulfing here, then you got this indecisiveness, right? Typically,
Yes.
two things happen. People are fighting for control. An indecisive candle means nobody won that trading session, correct?
Okay.
So remember how they list each candle. How they define each candle is one trading session. Every candle close is a different trading session, like they start and close. So every candle open, either 1 minute to 1 day, is a trading session. So a
Yes.
bull either won or bear won that trading session per minute or per second or per hour or per day, correct?
Okay.
So from here, if it ends in the middle, that means nobody clearly won. I did that. That's what the doji means. Nobody clearly won indecisiveness, right?
Yeah.
But from there, they say, hey, the opposing side in the initial direction of the trend say, no, we taking it this way. Well, in most cases, if it would have went down, right? Let's say pattern would have went down. You know, son, I don't want no confusions. But like playing around with the chart, I don't know oscillators. So price went down. This thing right here would have been an even star, correct?
Yes.
But they didn't let that happen. So in most cases, when you know a failed pattern, they call it a failure swing. But in this case here, right now, it's a failure swing because it did not make the even star pattern. It pushed on and continued, and it turns into an order block because people still would like to get some form of orders placed here, right?
I
And a lot
see.
of people loading the boat. So what happens is price will come back to this said zone because they didn't get all the orders in place. This was a quick little pop. Now, to get a better position in, what do the market makers have to do? Somebody got to buy, somebody got to sell. If they want to buy, they got to convince somebody to do what? Sell, right?
The sale.
All right, so how will they convince you to sell?
Now that part, you got me there.
Would
All
they
right,
have to lower the price?
exactly. So let's go over here, right? Let's go to this, let's scoot it back. Now, that's a wick, but let's go down to a 15-minute chart. And boom, what did they do? They made it drop very rapidly, right? Which induced selling. Boom. And then what? They see they truck you along here. They just remember the last 4 hours of the market of the previous day closed indecisive, correct?
Yes.
So from there, and then they do what at the open? They hurry up and drop it. Okay, so initially you're gonna see that candle coming down with force at the open. You're gonna say, hey, that's an evening star pattern. I'm selling it short. Oh man, they dumping the market. Let's say you was holding calls overnight. You're gonna say, ah, god dog, they got me. Let me hurry up and get out. Well, when they do this, they say they see everybody selling, and then another set of sellers or buyers is waiting right here with their limit orders to pick the market right up and go.
Oh.
So you see how
See,
fast that
I
was
got
happening?
caught in that the other day. I thought it was a put and I thought I was writing it down, but it did a nasty reversal on me.
Yes.
Okay, there we go. Thank you, bro.
Ain't no problem. This is how they do. It's called inducement, right? They induce you to sell so they can buy at a cheaper price and then go. But if you do not recognize those said patterns, you'll get caught up in these said moves. And remember what I always say, let the first 15 minutes of the market go by to let the volatility iron itself out. And if you would have waited one 15-minute candle, you would have seen it was a trap and you would have went the correct direction.
I appreciate that so much, man.
Ain't no problem. You ain't the only one that's getting smoked out like this, right? But the higher time frames will give you that said confluence you seen from the day before. Any moving averages you prefer to use, I mean any of them, with a signal like, hey, we are pretty bullish here. If I had any like 20 moving average, 30, 34, 50, 55, 100, any of those moving averages, right, would have told you like, hey, we're bullish. This thing just pulling back. From that point on, what's still getting most traders is not knowing where the pullback is going to stop at or where price is going. The moment you can start identifying where price is going on that chart, you can sit back and relax. Either you won't participate and you'll wait for price to get to where they want it to go, and then you enter right then and there, or you simply take profits, get in, and roll with it. You feel me? Or you already in, you already know, like, okay, cool. Are they really gonna drop it? Maybe yes. I'm not scared because I know for sure where they're gonna go. Or I'm not gonna take that said position because this is a reversal zone. You feel me?
Makes much sense, bro.
Yes. Now, what time frame was you watching when you took this said trade?
Man, normally I'm in the 15, 5, and a 3 minute.
Okay, so 15, 5, 3 minutes. So when you initially said, hey, this is a put, was you on the 3 minute?
I was on the 3 minute. Yeah, I sure was, man. I
Okay.
sure was.
So you look at it, it seemed like boom, one,
Yeah, it
two,
looked good.
three. Yeah, with candles like that. Oh yeah, it looked damn good, right? But what
Yeah.
happens is this: the moment it started doing this candle here was a signal to let you know you was in some type of trouble, right? Next candle, indecisive. Next candle, indecisive. Boosie candle. Come on now, you know about the Boosie candle, dog.
Yeah.
You seen that Boosie candle? Come on, don't you know not to be on the wrong side of the Boosie? And this thing wasn't dropping no more. Come on now.
Wow. Okay, I got
But
you.
this formed a whole new order block. You see these happen all the time. Price drop rapidly, fizzle out, 1, 2, 3 to the left, right, or to the right. The cha-cha slide now and got up out of there.
Okay.
Yeah. This right here is a new zone. You got to understand this price action, right? Boom. This is going to be a new zone for price to come and holler at later on. When they force price out like this, they're still building their orders up. They gave you a cool 9 minutes before they took you out of there. They said, man, go ahead and sit on this. The moment you see price wasn't after this, price start doing something funny like that in a higher time frame, selling you bullish, you have to sit there and kind of really watch what's going on here. The moment you had a halt of progress, that's the moment you know you're in trouble, right?
Okay.
So that's what you want to pay attention to. And that's the reason why you also want to have some form of a stop loss in place. I just think you're tripping with that. Click. Okay. Template. Bye. Template. This is also a bye. Let's see how this one plays. So there's the reason why you got to have some form of stop loss in place when they whip it back like that, especially trading at the open. You want to have some form of risk management in place. So if it do go that far back, it will stop you out before you can before you like sit there and hold that L, right? In general, price should never came back past this high here, right? If you entered on this candle or even at the bottom of this candle, price should never took that high out. This right here was your immediate stop. Any candle with force, right? Price should never came back for it. So the moment they put this candle in, you could have been like, okay, wait, what's going on? What's going on, right? They came up here, nothing. They came up here, okay, like look like they rejecting. Nope, failed to reject. You got a candle close above this said high. They're not playing with me. Price is going other direction.
Mm.
The moment they went back and reclaimed the open level, you definitely was in trouble. But at this moment, if you pick one of those weekly contracts, next day contracts, it'll trash sauce already. Right? You had a next day contract, that damn thing almost zero, right? If it gets back to this level. With that said, volatility and is whipping back the other way is over.
Man, boom. Thank you, man.
No problem. It just, these little small things that catch traders up every single day. That's why I highly recommend look at your higher time frames, look for confluence in the time frames, and only trade that direction. If you only trade one direction with the higher time frames, just wait for the intraday time frames to line up with that, you'll be perfectly fine. You remember, you need pullbacks to enter the market. So a lot of times you may say, hey, the trade is going against me. Well, initially, did you enter the correct trend? That's the real question here. When you wake up in the morning, what time frames are y'all checking? Are you going straight to your intraday time frames, your 15-minute, your 5-minute, then your 1 minute? Well, you failed to look at the overall picture of the day. That's to save yourself a couple of minutes of time. If you feel like you need more time to get ready, wake up earlier. Come to the market ahead of time. Be early. Do your due diligence the night before, especially trading options, right? The market haven't shifted yet. It haven't shifted yet. You got plenty of time. You can do the work after the bell. We know where it's sitting at. It's great. Now, for my futures folks, my Forex and crypto, market moving all day long. So for you, you simply need to, let's get off of this chart, right? Let's get out of here. Let's go over to the next. Let's go over to, let's pull up underneath the chart, right? I love futures, so we're going there first. Oh man, I forgot about that trade, right? So go right over to the NQ, right? Boom. First thing in the morning you need to do, check your 4-hour chart. Okay. First thing, before you even click any buttons, before you start hollering out anything, you need to go straight to your 4-hour chart. Check it out. Okay, what price is doing? It's climbing up. Great. Now, let me go down to my 1-hour chart. What price doing? It's climbing up. Great. I have a setup, right? Look for your setup. You need to see your setup on a 4-hour, the 1-hour, and I like the 12-minute. You can use a 15. I don't care. Figure it out. What time frame you like, right? I say I'm gonna go down to 12. Cool. 4-hour, 1-hour in agreement. If the 4-hour and the 1-hour is not in agreement, I'm not trading. I want full confluence. I need my signals to be showing me on the 4-hour and the 1-hour. If I got a buy signal on the 4-hour and the 1-hour, cool, great. I got my clouds, my EMA clouds, going straight up, great. Now from here, I'll be waiting on a pullback any form of fashion, right? So I have my sell signal here, great. Support. Now I enter the trade. It pulled back. Any form of pullback, I know, go long. There's nothing else to think about. Next time I pull back to say I missed this entry. Okay, great. Well, wait till the market open back up. It continued, great. Enter long, go long. The market get overextended, don't touch it, wait. A lot of times, even with confluence, if you trade in an overextended market, you can get chopped up. This is a prime example. The market went up, got overextended, then came crashing down. Right? You see it's off your moving averages, it's far away, it's been running in one significant spot, too vertical, you're gonna crash. So pay attention to these, right? This is a healthy trend here. Let's tighten up. This is a healthy trend. This is an unhealthy trend. It's too vertical, right? For me to actually say, hey, this is a trend, I got to connect these dots like this. I can't, it's hard to kind of get a connect on it. This is too vertical. I want something like this. So when you get stuff like this, it's happening at the top of uptrend or downtrend, the market is overextended, wait for it to find some form of support or resistance, depends on the direction you're trading it in, and then you enter your trade and go with it. But when things go bad, don't go with them. This is you trying to sell it off in a bullish market. Things are going bad and you're going with it. When things start going good for somebody else, you're sitting on the sideline praying that you get your money back. That's counter trend trading. You don't want to do that. But a simple 1, 2, 3, 4, check, follow the procedures. Let's walk back through them again. We're going to check the 4-hour. Is the market in which direction the market is going? Up or down? Up. Great. We go down to the 1-hour. What the market is doing? Going up or down? It's going up. Great. From there, I'm going to go down to my intraday time frames, 15-minute, 12-minute. And I'm going to see like, all right, when the last time it had a pullback? If it haven't had a pullback, I'm going to go find something in this chart to give me some form of a pullback, a setup, an entry. Order block for value gap, EMA crossover on a 3-minute, whatever time frame I got to find it on. I'm going to find my entry. I'm going to find out where price should go. And then I'm going to target my exit. I'm going to say, well, if I'm catching it here, I want to take profit here. Right? Great. That's the last swing high. I want to take profit at the last swing high. As soon as they find support, I'm just going to take it up there because I know they've been there before. So it's smooth. Now, can you use other technical analysis skills to determine a more extended trade? Yes, you can, but you just want to keep it simple. Use some stop loss, bottom support, take profit, last high in an uptrend. SOS for downtrend. Stop loss is resistance, right? Take profit is the last swing low. Boom. That's simple. But you got to follow the procedures. Right?
Can we stay on this trade? I have a question, right? So as this was going up and you saw the 2 time frames in an upward direction, the 1 hour, the 4 hour, they were all in uptrend direction, right?
Yes.
So in your case, are you entering in on the 12-minute? Or are you waiting for that 12-minute to finally find a bottom and then you get in on a lower time frame?
So what I'm gonna be looking for, I'm gonna find some form of support, right? I want to find an order block, a volume imbalance, fair value gap, something of the sort to say, hey, price should come here, right? So looking at this, we have a volume imbalance right here, correct? That's your volume imbalance right here. So since we back testing, boom. This will be your entry. Once price trade back into the zone here, you wait for a reaction and you enter your trade, right? So you do this for all markets. You gotta
And this is a volume imbalance because
so there's no body close in between this. So let's zoom in. Let's get up
got
close.
it. Okay.
So typically you have wick, no body. Body, wick. Price for a proper price action, price needs to close at a certain percent. Body of the candle needs to close certain percent into the next candle. Okay. So the moment this candle formed, it need to close X amount into this candle. Same thing with the previous candle. This candle need to close X amount inside the previous candle. When there's leave 2 dojis, that's a void, which is called a volume imbalance, and price will trade back into that said zone and get a close. So they didn't get far into this body close where? Pretty much right even with this, right? Let me add a horizontal line, make this more seen. So this the body close. Let's turn this line white. Let's turn it solid and let's bump it up. So you see this line, you see this the candle close right here. The last candle close of the day closed pretty much a little bit half of this candle, right? Almost taking up space between this wick and this, correct? So this candle would have closed a little bit deeper. We would never had no volume imbalance. It would have been perfectly fine for price to keep on trucking, but it did not. It left a void and they had to fill it. So when they trade back, they will trade back into zones like this to get a candle close, and then they continue on with the business.
Got it. So you get an entry once the candle opens above that previous red candle.
Yes. So what you want to do is most people trade down into these, and some people trade a rejection of them. But you want to wait for price to react with patterns like this. You want to let price react, and then once you see the reaction that's going along with your rest of your thesis of direction, then you trade accordingly. But if it's not reacting properly, don't be blindly entering the trade. You simply let it do whatever the hell you want to do. If it's gonna go down, cool, let it, right? And then you form a thesis for the downside of the market, or just not participate. If it decides to go up and you feel like it's a little janky, well, wait on another candlestick to get in, right? Enter on a red. That's what you do. You can do red, take out green, whatever technique you want to use to trade the next one, right? So we found this on a 12-minute. Let's kind of zoom back, right? Because I don't know how candlesticks. Let's go down to a lower time frame. We'll say, man, that's on a 12-minute. Let me go down to a 3-minute chart real quick and see what do I see on a 3-minute. Because same time is a pattern on the 12 is also one on the 3, right? Boom, there we go. We had a fair value gap right there. Great. Fair value gap. Okay, cool. But they wanted to come back down here. It went a little bit deeper. Same pattern, right? But we also had something else we could have traded. Now let's say, well, if that's the case, let's go down a little bit deeper to the 1 minute. What is down here? So I want to go deep as possible and find out where. Boom. What did I say earlier, right? About those candlestick patterns. Order block continuation, right? Here we go. Then I just show y'all this on the spot.
Yep.
Told you they happen every market. Every single market have these same patterns. Once you learn to recognize them, let's cut these clouds out, right? I want to trim this down. Let's clean this chart up. Make sure everybody see this. Boom, now we can get rid of this box. And that's the reason why once I find on a higher time frame, I'm gonna go find my sniper entry. I'm gonna drop down until I find like the definite entry, right? And that was it right there. This 3 candlestick order block continuation. Back. So from there, boom. Order block, price did what? Trail sideways, boom. Then boom, went off. This pattern happens in all markets. So it's not, oh, it's just in this market. No, learn it. It's in all markets. Stocks, options, Forex, futures, crypto. This happens in all markets. Once you learn technical analysis, you can go to any market and perform the exact same thing. Maybe you got to tweak your process different. Maybe you have to do a different SOPs for it. But technical analysis are same across the board. What I'm showing you here, the same thing you can put to use on any chart. Some of them have a different pattern combination that they may like over other ones, but they all do the same thing over and over and over and over again. Okay.
Cool. So then this one here seems like there was a gap up, or it's the next day, whatever contract, whatever happened, right? Because it gapped up. So then we probably couldn't have gotten in because we didn't see what the next candle was going to do, but we saw that it did go into that order block, right? What's your stop loss? Below that wick? I
Just
mean, if
below
you
the
wanted to get in
block.
prematurely, or just below the block? Okay.
So there's 2 ways to enter this, right? You got to first determine how big is your risk. So first I need to understand how big is this block. So bam. Oh, this says 20 ticks. Shh. Okay, bet that ain't nothing, right? So I want to go here to lower this candle, or I can go right outside the box. Depends on how confident you are, right? If you feel like, man, this thing kind of coming down some force, I want to be outside this box for sure. Don't want to be at the edge of the box. I want to be outside the box, right? So what I'm gonna do is I like to say, well, what's my max pain? What do I don't mind giving up? So put your stop prop. You can put your entry here, right? Boom. Stop loss somewhere outside the box. You can go to the bottom of this said candle. They shouldn't go this low. They go that low, it is what it is, right? So say 33 ticks, and I'm targeting the highs, right? You can target this high, that's 79. Okay, great, but I want to take the high, right? So that's 162. Cool. That's how you enter that. Now, if you want to get your risk management tight to say, man, I don't want to give up that much, well, play along, play with the entry. Drag it down a little bit. Say, man, let's say, well, I want to enter here. I can afford that. That's 24 ticks. Play along with the entry or wait for price to react and then take it. You can enter at the block or you can wait for price to react once again inside the block and then take your trade. Once you see it showing weakness or showing some form of reversal. Get what I'm saying?
I get what you're saying.
Okay, smooth. Yeah. So these are the like different techniques you can use for your risk management. Once you identify what the trade is going to do, identify a clear target, which is a last high. This can be your intraday target. So this can be TP1, that's TP2, right? So let's leave this. TP1. So if you got multiple contracts, you can scale out. I like to scale out on TP2, right? Boom. So TP1 and 2, and then you want to let it continue to roll, go for it. Why not, right? But this can be your initial target where in the heck the price came from, because at least they'll go back and revisit the highs. If it decides to fail, at least they retested the highs. So you can take profit there if you want to and say, great trade. Nothing wrong with that. That would have been you risk 30 for 70. It's like a 1 and a 1.2, 1.3, give or take, right? Or you can go for the gusto and go for TP2. Sometimes it could get there, it could not. But anywhere in between that, with proper risk management, you will not lose the trade. You put a stop loss in a profit, let the trade do what it's going to do. Great. Stop me out. Cool. Take profit. Cool. Whatever may happen, I'm fine regardless, right? But that's also trading with the trend by understanding that the higher time frames are screaming buy, 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 buy. I can sit back and relax and have confidence that the market is going to continue to go up. I just got to know how far they want to take it. What's the max level of pain? What's going to trick the other traders out of their position to take that loss so they can build me up. Unfortunately, in the trading world, you must step over other traders to get to where you want to go. It's a zero-sum game. Somebody got to lose, somebody got to win. If everybody got participation trophies, the market would not move. So understanding that, hey, the people who sold it down and got greedy, fell asleep at the wheel, and got caught up in this, trying to squeeze out a couple more ticks, trying to squeeze off another percent, then get smoked on the other end, that's on them. Not your problem. You was patient, you was prepared, you was not counter trend trading, you was not trading this BS price action here. Look at these small candles. This is BS price action. And people try to trade this all the time, and you shouldn't. By sitting back, observing what's going on, looking at the bigger picture here, right? You can take advantage of this. When they taking advantage of those traders, because they take advantage of themselves. Patience is the number one key here. If you have patience, wait on your setups. If it takes a day, it takes 2 days, 3 days, a week, maybe 2 weeks, 3 weeks. Wait for your setup. And when that happens, you can be full on conviction. In the story, you'll see your probability go up. Now, any questions, comments, concerns? Let's get it.
I think you hit the nail on the head when you mentioned the word patience, because at least for me personally, I seem to want to jump into every trade. And then by the time I click that button, I zoom out, I'm like, Nah, I shouldn't have done that at all.
And that's the thing, right? I don't what you need to see is this, right? Big brother, what is your setup? What is the criteria for you to enter a trade?
Okay, so I have my screen split into two. The left side is the 2-minute chart, and the right side is the 15-minute. So I have my support and resistance plotted on the 15, so that gives me a broad eye view of what is going on in the 2-minute. And then
Yes.
I make sure it's either oversold or overbought on the stochastic before I jump in.
Okay. Now, what other components do you use to say, hey, this is going to be a trade?
I have two EMAs, the 13 and 48.
Okay.
I make sure before I jump in, I'm as close as possible to the 13. If I'm
Yes.
far away, it's usually a bad sign.
Mhm.
That's
On
what I
what
use
time frame?
on the 2-minute.
On a 2-minute. All right. So do you look for that same crossover on the higher time frames to give you a sense of direction? Or you just only look for that crossover on the 2-minute?
I try to match it on the 15. I look at it on the 2. I try to match it on the 15. And the major difference is because the 2 minutes will be obviously faster than the 15. I
Mhm.
try as close as possible to match it on the 15 before I jump in on the 2.
Okay. So this the thing, right? Before you even go down to the 15, see if you see that happen on any other time frame. And you can do this after we get off the Zoom. Go back and back test when you had higher time frames confirmations with your same setup, right? What you're moving at. All you need to do is pay attention to what your moving averages are doing on a 15. You can go to a 20-minute, 30-minute, 1 hour, 4 hour, right? Even a daily. Go see what happens when all those time frames in a line, and then you go down to your 2 minute to execute how your trade would have turned out. Because I'm sure you found success with this before, but some days it missed the mark, correct?
Yes, sir.
9 out of 10 on those days that it hit perfectly, you was in trading with the higher time frame. The days that it didn't, you had an indecisive market and you got caught up in the short term trend. In the short term trend, with a counter trend trade, this what happened when it say, hey, it's oversold. Okay, cool. Everything about to pick up real quick. I got a 1348 crossover, right? To the upside.
Mm-hmm.
Great.
Mm-hmm.
What that crossover is doing is this. It's dragging you to resistance. So it's dragging you to a wall to the roof and you about to hit your head. And you sitting back cheering right along because the day before it paid you out. Well, this time it's dragging you up. You knock your head, you hit your head and you pass out and you're like, oh man, what happened? Because when it crossed over, it was pulling back to retest a higher time frame moving average to bounce off of it to continue down.
Okay.
I guarantee it. The moment you go back and back test it, then send me a message in the chat. You'll say, yeah. You'll see
I
exactly
sure
what
will.
That's what happened. Anytime you get a lower time frame crossover, it's a pullback for the higher time frames. Same thing with these signals. This 1 minute sell signal is a pullback for the 10-minute, whatever
The 10
minute
minutes.
signal on a higher time frame. As we go
Yeah.
up, you'll see less and less sell signals, and you'll see like, okay, cool, that was a blip that turns this little sell signal turned into a wick on another time frame because it was nothing but a pullback for the higher time frame. That's why when these signals come in, the sell signal was a boop, and then it went off. This sell signal came in at way over here, and it only lasts for 5.2 seconds before they said we taking off. Knowing it been in a buy signal the whole entire time.
Thank you, sir.
You're welcome.
Yeah, thank you for that.
Hey, Neil.
What's up, sir? How you living?
Oh man, pretty good. Neil, on the NQ,
Yes, sir.
I went to the 12-minute, and
Mhm.
where you have that sell signal at,
Mhm.
uh, yeah, where you had the sell signal at, I turned around and I
Mhm.
drew like a vertical line.
Yeah, on this 1 minute sales signal.
Uh, no, I was on the 12-minute chart.
Okay, let me go to the 12 minute. And it's the exact same time from Wednesday at
Uh,
4:48.
yeah,
They let my
actually, it was at.
Oh, you're talking about this one?
Uh,
Are you talking
yeah,
about
yeah,
this
that
sales
one right
signal
there.
right here?
Yep.
Yeah.
Yeah.
Okay.
So I drew a horizontal line right there, and then
Mhm.
I turned around and dropped down to the 3-minute.
Okay, let's go. Boom.
And on the algo, it has like uh, it has the swing points on it. So
Yeah.
basically, I drew a field from the bottom to the top, and then of course it's gonna automatically give you like your 60 I think the 62%, and then you could like literally just enter it in from there.
So this what price came from. This what price pivot from.
Right.
Came
uh
down to a 50% retracement.
right, and then
Take it.
yeah, and I just drew my field from the bottom back all the way up to the cell, and then it's going to automatically. That's one of the things I've been noticing is
Yeah.
like if you have your swing points on, it just makes it a lot easier. You just once you get your sale, you just draw it from the low all the way back up to the high, and then only field levels I have is like the 50, the 62, and the 38, and that just lets me know where I need to enter in. Everything else I just turn off. I don't pay attention to anything else.
All right. So actually I use a lot. I use a wide assortment of fields for different purposes, right? So each one of these fields is a measurement of resistance. So a lot of things really like get deep and down into these study of fields, right? Each one of these is support and resistance. The goal is to find out where it's going to find support at and how strong a support that is. So the deeper it draw down, the deeper the discount and make it more desirable for people to pick it back up and continue. I use the negative levels for my target, my TP1, TP2. So as I draw it, it's gonna be well out there. So while price is doing this, I already got my mind set on here and here. So I can plot my future out. I'm saying, okay, cool. I'm gonna take this. 9, 10, they're gonna drive price up there. I'm great. When it come down to this 50%, that's a good spot. I say, man, but what if it get there? That's cool too. If it reacts, especially I got this boosty count, I already know what time it is. Let's go. Right? And from there, remember, we also trade time of day, all that little stuff. But that's great that you recognize that and keep it up. Look for simple confluence like that to increase your game and give you a better edge. That's what it's all about, is finding edges in the market, figuring out what works for you. Not everything works for everybody, okay? Just because we may do this doesn't mean it works for you. What you're currently doing, make it work. Figure out what's wrong with it and fix it. Do not abandon your system. Fix your system. Most people are too quick to abandon their systems, throw everything away, and go run from system to system to system when it's just a simple flaw you could have fixed and it would have made you profitable. You're already used to it. Build on it. That's why I always ask, what do you do? Let me help you out with what you're doing. I'm not trying to impose my systems onto you. I'm trying to increase your systems because I know that's a faster fix. If you're already used to something, if I can build on what you're already using to help improve that, that is way more profitable to you than me trying to hand you something. If you already got something that works, I'll say, cool, let's look at it. Let's put another set of eyes on this. Let's look at it from this way. Can we add to this? Or what are you doing, not doing, that's causing you not to be as successful as you are? Everything works if you put the right system in place for it to be successful. Okay.
Perfectly said, because I was in that trade to the ups. Well, I got into a trade thinking I was going to get a reversal to the downside, and it just wasn't reversing. And every time I kept thinking, oh yeah, this is going to be it. This is going to be it. I kept getting clapped, and I was like, this sucks. So I ended up getting stop losses, and I was like, why am I fighting the trend?
Hey, sometimes it be like that sometimes. But that's when you got to have that rule set to say, hey, I'm giving myself X amount of trades. If I'm wrong, X amount of times, shut it down, paper trade, or just stop participating because something is not clicking with you. Somebody disturbed your peace that along the way to the market. And it could be outside factors affecting your judgment. Because even when you finally do get the direction correct, it's happened to be doing something else at that time. And now you're really messing up. Because you may say, oh man, I took 2 wrong positions, counter trend trade. I'm going to go with the trend now. Oh, no, the trend doing something else. I was right. And now you in the middle trying to play both sides of the field, thinking that you was right, thinking that you wrong. You don't know what the heck going on. You just know your account going red. Sometimes it's better, take your little small loss, pack it up, and go enjoy your day. Come back tomorrow when you're fresh.
Yep, that's what I did. And I should have waited for that trend line break because I saw that trend line break, or even if I waited for that 50-foot retracement, which you know that I like. And it's just kind of like, why didn't I just wait until the top? And that's what I should have waited. I should have waited for the top to top and got the pullback.
It happens to everybody. Like, it happens to all of us. We all fall for that, right? We human. That's the market is not as technical as you think it is. It's more emotional based. They do things with technicals to make you emotional so they can take advantage of those said emotions because they know most people run off their emotions, not their technicals.
Yep. No, thank you. And I think it's always like that whole thing, like, oh, I'm gonna catch the top, I'm gonna catch the top. You don't even catch the bottom. Nope. It's better to be late to the party.
Yes. It's better to move correct than it is to move fast. Now, on that note, everybody, that is my time. It's been a blessed Wednesday. I'm gonna stop it here. Shut the
Thank you, bro.
Ain't no problem. Ain't no problem. We stop